Hi, how you doing? My name is Jeff Roth. I'm with Commercial Finance Advisors. We do SBA as well as commercial mortgages throughout the nation. In this video, I'm going to be talking about low credit scores and their impact on getting loans closed, commercial loans closed in this market. Know that this is just one section or one video of our report, total report regarding solutions to being declined financing. You can find the rest of the report on our website, and we cover many other topics such as how to research banks, strategies for dealing with loan officers, and solutions to the most common causes for loan decline, such as declining trends, low cash flow, etc. So, regarding low credit scores, the first thing, there's two things here to really keep in mind is that the whole credit score industry was created for lending institutions as a way to judge the character of borrowers, and it's a very subjective topic. It's very difficult for banks to pin this down, and certainly the system is very, very flawed in a lot of ways. But on a day-to-day basis, loan officers at banks really use this tool as simply a filtering tool. It's a very efficient and quick way for them to decline files. And we've talked about this in other sections of the report, but as the banks that are funding are extremely busy, and they're looking for ways to quickly turn down deals that aren't very, very strong. And so this credit scores themselves are a very efficient, very easy way for them to do that, unfortunately. So if you do have issues with your credit score, there's a couple of general solutions here that we list on our website. I'll go over a few of them right now. But first and foremost, you need to pull your credit report, and you need to look at it. You need to study it. You need the whole thing, not just the score. You need to go through line item by line item and get a better feel for what is on there, where you have been late on payments, and also you really want to look and see if there's any mistakes on the report. It's still estimated that 70% of the reports out there do have mistakes on them. So, if you can identify mistakes, or if the report itself has items that are reported as late and that they're over 7 years of age, you should be able to have those items removed from your credit report. And if the task is too daunting, or if you have too much, too many things going on here, you should really give some serious thought to hiring reputable third-party companies to help you out with this. We have had success with law firms that specialize in this, and they might be a little more expensive than your typical credit repair company, but the ones at least that we've worked with have been thorough and understand the system. They understand the limitations that the credit bureaus have and know how to work within that. So another suggestion here would be, if you do know that you have issues, you really need to sit down and write letters of explanations. And you really want to have those letters written before you contact banks. If you're able to immediately address a banker's concern about your credit report or credit score, you're gonna do yourself a huge favor in that. They're going to, number one, see that you're organized, that you're ready and willing to provide the documentation that's needed to get a loan done, and hopefully you're going to give them a strong enough argument when they go to their committee or upper management at their bank that despite your credit score issues, that you still are, quote, credit worthy. If you do, you want to follow up with any negative marks on your loan request with your strengths. So you need to sit down, have a better understanding of what your issues, what your strengths and weaknesses are, and after you get done explaining issues that you may have, you may remind the loan officer that you have great liquidity or great experience, your trends are stable, etc., to give them the ammunition they need and the confidence they need to continue to pursue your loan. Sometimes the credit bureaus reporting is really just off and flawed. For example, we will have borrowers that will approach us with, high levels of debt and, $150,000 worth of business and personal credit card debt, as well as their other debt to vendors, mortgages, etc. And it's not uncommon for these people to have credit scores in the upper 700s. And then sometimes borrowers will approach us with virtually no debt and perfect payment history and will have scores in the 600s. So I really don't have any idea why that really is, but we see it. And if this is your situation, you need to point that out to the loan officer at the bank that, look, I've never been late. I have no idea why my score isn't better. It's really just a flaw with the system. If you look at my credit report, you can see that I have taken my responsibility seriously and have made my payments. And even if your score is in the low 600s or in the upper 500s, if you can document that and prove that, you can, in fact, for a lot of times, get the banks to listen to you and still fund your loan request, even in this market. And the next point would really follow that point is that a lot of the larger banks will have requirements that are set in stone. They don't want to hear any explanations. If your score is not a 680, then they just shut the door on you. So a lot of times the solution is to find a smaller bank or larger bank that will take the time to listen and get a better understanding of what's really going on. So finding a more aggressive, a more healthy bank that's really in a position to lend is a very common solution in this market. If you have issues with your credit score and you have a lot of revolving debt that's near the limit of your of the line amount. For example, in other words, if you have a credit card with a $10,000 limit and you're at $9,000, a great way to drastically improve your credit score is to basically pay that debt down to about 30 to 40% of the balance. This can have an immediate impact, and if you do have the cash reserves, can be a relatively easy and simple way to make a big impact on your credit score. In conclusion, really the worst thing you can do is basically to just simply not pay your bills or have a history of not paying your bills. What the banks don't want to hear or don't want to get the impression of is that you simply didn't want to pay. And this is exactly the whole point of the credit reporting system. They're trying to make a subjective decision on your character, and this is probably the single most thing that would allude to that. So, if you do have late pays, you want to make sure that that there is some reason behind the late pays. And again, going back to the other point about the letters of explanation, that you document and provide letters explaining that. So, hope you find this information useful. I wish you a lot of luck with your search for financing. Again, the rest of the report is on our website, and thank you for listening.